Should be live. Yeah, live. Oh no. Okay, I forgot to put on the low latency again. Apologies. It's only 20 seconds, it'll be fine. Yeah, a little bit annoying, but that's okay. Okay, let's break down the chart. Starting from I'll go daily chart. Alright, we've got this busy and new week opening gap range that we're working within. You can grade that if you want to. I'm just going to focus on the gradients of the new week opening gap in particular right now, because I don't really need the information from here until we're a little bit lower in that range. So I'm not bothered with that very much. I don't really have a bias today, just because I can absolutely see this being a down close candle, staying in this range for the rest of the day and then the rest of the week. Maybe we get a reversal profile on Thursday, Friday, and then that trades higher. So we'll just have to wait and see. 4-hour chart, we have low resistance liquidity up here, but I don't think we'll get that today. I'm not looking for that to be taken today. Hourly chart, we've come to a little bit of a standstill inside last week's new week opening gap. That is the 27th of October's NLOG. Body's respecting the upper quadrant. Everything here seems nice for a little rally higher. In terms of the overnight range, we open up, Asia keeps trading lower, trades lower, London a little bit tighter than you would want to see. You'd want to see it a little bit larger, but that's okay. Still respecting the upper quadrant of the NWOG, trading inside this bounce price range now. And we have these original consolidation highs, relative equal highs, that I'd probably want to see price draw towards next. We've basically faked this level a lot, so we came up one time, missed it, missed it, missed it, missed it again, missed it again, missed it again. So we have very, very engineered highs up there. That's my main objective for the morning session. Hopefully we get sell side manipulation first, and then it shoots higher, but I can see it just trading right up in, or at the market open, because our regular trading hours, closing price is all the way up here, 26,125, and we may get, well, we have a massive opening range gap, so it's not going to be a friendly morning session, but that's okay. Morning Braden, morning Ivan. Okay, I'm not concerned with the run that we got between 8:30 and currently. I'm just gonna let the open do whatever it's gonna do. Probably gonna avoid the first 20 minutes or so, and then I'll start looking for trades. There may be live trades. I don't recommend you follow them, but I'm not gonna come knock your door and enforce that rule. You can do what you want. The line doesn't concern himself with the pre-market lows. So the pre-market low it has been swept at this level, so it doesn't need to return to this. But because of the way we displaced higher, I still consider these relatively equal lows. It only took it by a couple ticks, so it can absolutely trade into this now. because this was the original 840 low, and it gets traded through by a couple ticks at 903, so it's fine for it to be used as a draw again. If we can get manipulation of this low, it will be really helpful for long setups. Okay, this is our opening range gap. Absolutely huge. How many handles is that? 382 handles. I don't place a huge amount of emphasis on these just because trading into the consequent encroachment of this is very unreliable, so I don't require that ever. That's our consequent encroachment. Morning, Brad. Sweeping with wicks. Pre-market I would not count as well, I need bodies. Yeah, same. Well, sometimes if the wick is long enough I'll use the wick, but if it's a small one like that, I don't care. It's still a valid draw. We'll tune in for a few minutes and go trade. Yeah, no problem. The distance between the upper quadrant and the actual opening range gap below, even that's almost 100 handles, so I don't really need the opening range gap this morning. If we start trading in it, then I'll put it back on, but for now I'm going to take it off. Okay, we don't have any news today, so I'm going to place a lot of focus on the 950 to 1010 macro. Let's check out yes. Damn, why I'm just dumped. No, I'm not really too concerned about that. I wouldn't be going for crazy ambitious profit targets. Like I would never be targeting the NWOG high or the opening range gap high. You can leave runners for those types of things, but for the majority of your position, if you're looking for long trades, which is all I'm looking for because we're still just coming off all-time highs, the pre-market high and these relatively weaker highs have my main interest. I would rather we don't trade below this low, ideally. Anything beyond that, I would probably rule out long trades for a while. That's not saying I would disqualify them completely, but I would just sit on hands and let more information come. Have closed through this now, 933. So this could probably continue into that low. Maybe. We'll see if this inefficiency gets left open. 932 first presented fair value gap, and it's a breakaway gap, and it's overlaying last week's new week opening gap high. So this is probably going to go lower to that low. But I don't want to be selling in an all-time high environment. I know we're not at all-time highs right now, and we're still trading away from it. But even just being in such close proximity, I'll just sit on my hands and ignore those. Look at the levels inside this. If you see a reaction on CE, consequent encroachment, then not saying sell, but it's got a good chance of going into this low now, which would bench me for a while. See how this candle closes first. Yeah, all of these are in bearish fair value gaps. First presented fair value gap 933. Nice, 932. Unless you're using subcategories, saying this is the first presented breakaway gap and this is the first presented SIBI, then yeah, you're correct. I'm gonna... Oh, and walk upper quadrant. I mean, I'm not complaining. If we can invert this, it would be good for a potential buy setup. Did I miss any gems? No, not really. Not really, you're good. I wouldn't enter this right now just because we have the first presentation fair value gap there, and this is a very strong PD array since it's overlaying the new week opening gap high. So I want to just sit out for a moment. And potentially if we trade above this, then I could maybe look for an entry. Maybe. Consequent encroachment of this and the new week opening gap high up, pretty much the exact same level. Okay, not strong inversion gap because it traded below the midpoint. You don't want to see that. You want to see the upper half stay, well, you want to see price stay in the upper half and leave the lower half closed. Or sorry, leave the lower half open. See how this 5-minute candle closes. Because if it closes with that wick staying there, I probably see it trading into that wick and then down into the low. Maybe. All this here is low resistance. So when we, or if we get a move higher, I would look for these to be my, or to be like a strong draw. But until we see something that really gives us a strong indication of strength, I'm just going to sit on the sidelines and wait for the macro. I'm going to grade this 5-minute wick. I want to see something resist off that if it's bearish. If it's bullish, I want to see it inverted, traded above. AMOX here. How are you, AMOC? I'm good, thanks. Thank you very much, sir. Okay. Nearly inverted. It's not quite, but it's probably sufficient. Because if you're bearish, you're not going to trade all the way above a wick like that, and then trade lower anyways. So this is now a very important order block. Okay, this is strength. We're leaving that as a breakaway gap. Which is good. I might miss a long setup here though. I don't think I'll be able to get in. Warning lumber. Warning mate. Yeah. It's just not happening. We're not getting a trade into this now. Thing is, you could take on, but then look at the risk you have to incur. It's a little bit less than 1R. I wouldn't want to do that. Because it can reach all the way back into this first presented gap. Leave a like on the stream. Okay, so the body's closing on the upper quadrant of the new week opening gap from last week. This is last week's new week opening gap. Let's go to the 1 minute. They did close there. So area of support, inverts this, leaves a breakaway gap. Leaving a breakaway gap is a signal of strength, and that just means you're going to have faster displacement and trading speed into the objective, and usually you'll go a bit further than your low-hanging fruit. So if this is the low-hanging fruit, not because you're just picking, oh, this is the amount of money I'm content with making, but if that's genuinely, the low-hanging fruit of the range, then it'll probably extend a little bit further into something above it, whether it's liquidity, an inefficiency, a new day opening gap, anything really. Okay, I'm not going to take that just because of how far we've already overextended. That's our dealing range, and we're way past equilibrium. So I'm not going to buy in a premium. Okay, correlated market conditions, that's good. Everything's moving in sync. That's what you want to see. Go quick up to the dollar. A mentorship students, no. Okay, final little order block, but again, not really something to enter on just because of how far you're in on the range, and it can trade all the way down to this gap or this breaker. I would want to use this as the breaker. I don't really care about the wick that much. Even though it's like, oh, well, this candle made the high, but it's an outlier. That wick is, it's like a colouring outside the lines. I'm not really interested in that data. I'm looking more at where's the majority of trading happening inside the breaker, and that would be here. So this aligns more with narrative than using the entire wick and the entire candle. You're just covering your entire chart and saying at any level here it can be used as support. You want to be able to refine it to something like that. When do you identify an order block or a breaker? How do you usually take a trade? Do you wait for confirmation or straight entry? It all depends on narrative and strength. So if I'm very confident that it's going to keep trading higher into a key level, sometimes if we're in an appropriate level of the range, right now we're already way past equilibrium, so I would never do it here. But say we were in, you know, 40% of the expected range, and we're still trading higher, and we're just powering up and up and up and up, and it just trades through the breaker. Sometimes it's not going to give an entry on the breaker. It doesn't need to. It doesn't need to retrace back into it to give you your buy signal. So if I'm expecting it to just keep displacing and displacing and displacing and displacing, then I'll just buy it without even waiting for it to come back down into the necessary PD array, and I'll adjust my stop accordingly. So if this was around 40% of the range, which it isn't, that's why I didn't take it, it's already way past equilibrium, and you shouldn't be buying in such a deep premium, then I would have probably just taken it there, out of my stop loss, like this, and have my target all the way at the 100% of the range. Obviously, here that looks horrid because of how deep we are into the range. Hopefully that makes sense. But I don't exclusively do that. Like, it can retrace into the PD array, and then I'll buy it then, and I'll wait for it to do that. It just depends on what the strength of the market's looking like, and if I think it's just gonna keep powering higher without giving me the entry, I'll just buy it whilst it's going up. But generally, you want to wait for the retracement. Oh, good morning, good morning. One is Sui. One in gaming with Krishna. I'm looking at this now. There's the order block, and I would filter that to just be mean threshold. So just the upper half, like this, and then 25,750.75. This is the upper half of that 947 order block. So I'd look for this to be support. I don't really want to see it trade below that. It can wick a little bit below it because we have other PD arrays that it can respond off, but this should be the main one. Generally, you want to take the approach where, referring back to what I said earlier, on just buying it without the PD array being entered. I don't recommend that. It's just something that I do if it's really, really bullish and it's going to completely take off. Then I won't wait for the entry. I'll just buy it. But it's probably better if you're a beginner to not do that and wait for the entry. Sometimes you'll miss it and you just have to be content with it. Why are you not marking the hourly order block? Because I don't really need to. You don't need to mark every single PD array, you know. Your charts will be littered. I'm looking for a continuous institutional order flow. Okay, good luck. Why is 931 not a breaker? I mentioned it earlier, but basically I'm not concerned with that portion of the wick because it's a bit more of an outlier wick, and it was formed very quickly. The majority of trading in this area of price action, if we're looking at just where should the breaker be, it should be at the high, because it's low, high, lower, low, higher, high. So when we're looking at the high, which high is going to be what the majority of orders are, it's going to be here, not at that little tiny wick. Well, it's not a tiny wick, but it wasn't there for a lot of time, whereas this, it was there for a good chunk because it's an entire body. So the majority of orders were at this point, not at the wick. So I'm just going to disregard this and look at the bodies for the breaker block. Okay, that's target reached. Ugh. We displaced way too quickly for me to be a participant in that, so unfortunate. Took London High, yeah. These are London Highs. Look, London Highs. And this is where I put the opening range gap back on, because I want to see how far we're willing to trade in it. We'll make it. No, I'll do something like that. Okay, so the green lines are the quadrants of the opening range gap. Just so you know. Yeah. Back, just a nice W on those longs. Nice. Inshallah, will be a clean formation of the institutional info model. Yeah, I don't know about Zuzi's models, to be honest. I don't like Zuzi. I don't know. Maybe some stuff's legit, but sell out. I got the London High, that was enough for me. What's the trade in Discord? Nice. Hell yeah. I missed it because of not wanting to enter in premium. Oh well. Maybe it'll be a New York reversal, especially with how we're leaving all of these gaps open. We left this one, we left this, we left this. I'm going to keep getting into the opening range gaps, gradient levels. That's a 5-minute breakaway gap as well. I don't need that anymore. Okay, let's look at event horizon of last week's new week opening gap and this week's new week opening gap. Okay, that's event horizon. Event horizon is very simply just the midpoint of two significant PD arrays, liquidity pools, and dogs and logs. If you measure between the two of them, you can use this as a target, you can use it as support resistance. I waited for first presented for value gap to inversion for value gap that wants to break at area.